We're going to kick things off now with our overview panel with some of the women who helped serve us on our advisory committee. Pam Hendrickson from the Riverside Company, Jerry Harmon from Avante, and Suzanne Yoon from Kinsey Capital Partners. Thanks so much for joining us. And I know Jerry is on the West Coast and Suzanne is in Chicago. So thank you for getting up especially early. Pam and I are on the East Coast. Pam, why don't we kick things off with you? 2020 was, a roller coaster of a ride, but it ended well for deal makers. Deal flow was roaring. Has that momentum continued into 2021?
I think the market is very bifurcated, with good deals going out quickly at very high multiples, and deals with a little hair are either not trading at all, or you're doing a lot of work to figure out whether there's a real thing here. I was saying to someone earlier that I saw a company the other day that had 6 million of real EBITDA and 16 of EBITDAC or add backs. Like, what? So I think the market is definitely bifurcated. I do think I've heard our head of origination say fear of tax increases is a real thing, and I think that's worrying.
Yeah, and you're going to be talking later, Pam, about sort of the effect of the Biden administration, and we'll be talking about taxes as well later in the day. Jerry, let's talk a little bit about valuations and how you're seeing that play out in today's market.
Sure. Interestingly enough, we would have thought during COVID, with all the uncertainty, not only because of the pandemic, but also the repercussions on the economy, that you would have seen a pretty dramatic dip in valuations, but we really didn't. I mean, there was some pullback, in the initial, kind of second quarter. So a few months, everybody pulled back and there wasn't a lot of activity, as well as the valuations were clearly impacted. But by the third, fourth quarter, things seemed to kind of roar back. I mean, both in terms of deal volume, but that also in terms of valuations. We had a record deployment year, so I'm happy to say, even and that wasn't rescue financings either. It was really doing normal, regular type buyouts and buyout financing. So it's really back to almost pre-COVID levels. I mean, I think, Suzanne or Pam, when we were talking earlier, I think you even thought it's gone above that, but we're kind of seeing that. The biggest difference is and as Pam says, the have and have nots. If it's a company that's shown resilience through COVID, they're getting almost a premium, than what they might have pre-COVID. But then you've got the other companies that have been unfortunately impacted, or the uncertainties around the economy make their future outlook a little less clear, and those have not gotten premium valuations, and it may not even get done.
And
Jerry, I was just going to, sorry.
Yeah. Well, I just wanted to bring Suzanne in too. Suzanne, what are you seeing in your deal flow with valuations?
Yeah, I think Pam and Jerry's comments are very consistent. We saw deals that got done in the third and even into the fourth quarter were mostly deals that were people were working on prior to the pandemic, and so there was just a longer cycle in terms of because we had to do diligence remotely, and the timing and the credit markets actually really tightened up, particularly the bank market in the second and third quarter. So as it started to open back up, I think we started to see deal flow come back, and valuations, I think, were still relatively moderate, through the end of last year. I think this first quarter so far, what we're seeing is really a big uptick for, I think, Jerry and Pam. It's the haves and have-nots. If a company has done well through COVID, the valuations are high, but I also think that's being driven by the credit markets opening back up, the pent-up demand or pent-up supply of capital that really wasn't able to deploy last year as aggressively, I think, as people would have hoped. And so there's a combination of that, and the public markets have been really performing well. And then now we have, I'm sure, I know this is a topic later today, but even the the SPAC market and how that is creating a lot of exit opportunities for people and driving up valuation. So we've got a number of factors going on. But I think, the good part of that is there is a lot of optimism. And I think we need that in the country right now. It's been a really hard year. I think maybe not on the deal side as much, but just emotionally and for the consumer and labor force in general. And so I think, having the vaccine and the optimism, I think we're seeing a part, that's also, I think, flowing through valuations right now.
Yeah, that's a really good point. I'd love to hear more about optimism, Pam and Jerry, if you want to weigh in on that.
Well, I was just going to ask Jerry and Suzanne, are you seeing a difference between more platforms or more add-ons? Because we have seen definitely some really meaty add-ons, and I think in the bifurcation of haves and haves not, it's the add-ons that are becoming kind of the interesting play for us, because some of them are pretty big. But
yeah, we work with sponsors all over the country, so we see a pretty good cross section of who's doing what and where the common denominator is. And clearly, add-ons were very robust, right? We talk typical sponsor. These are lower middle market sponsors, just in terms of size. And they might have done one or maybe two platforms last year, but they probably did 20 add-ons. Mm-hmm. Yeah,
right.
It really was that kind of ratio. So
yeah,
you're right,
I think that is. I think what I'm seeing as well, I think in the lower middle market in particular, you have, the dynamics are, you have a baby boomer generation that is retiring, and really probably during COVID, if you weren't well capitalized and your capital structure wasn't strong, it was probably, and you had private equity firms that had good platforms that were looking to acquire.
Oh, Suzanne, you muted yourself.
Suzanne, you muted yourself.
We have a time clock. As soon as we go beyond a certain
right, yeah, really.
Okay, well,
this is totally not your question about optimism. Sorry.
Yeah,
I noticed that got derailed. Let's switch gears for a second though and talk about things like the macroeconomic environment and interest rates. Jerry, you're not only are you private equity, but you're a lender. Weigh in on that.
Okay, so well, first of all, just talk about the leverage market, right? Just as valuations have gone up, leverage is still at pretty high levels. Again, there was a big pullback, in the second and even third quarter. It took a little longer for the lenders to kind of come back full force into the market through COVID, but certainly by the fourth quarter, I think lenders were back to the market in a way that resembled pre-COVID levels. Again, with the have-nots caveat.
Yeah.
In terms of interest rates, obviously that supports a higher leverage levels because you can just the debt service coverages are strong. There's still a good forecast for low rates for at least the near term, if not medium and long term. So that's a positive, I guess, right? And that's one of the benefits too, is that for the companies that were over leveraged going into COVID, that gave them a little more room again, because, they weren't having the high debt service because of the high interest rate obligations. So the liquidity situation was a little better than it might have otherwise been.
Okay. And are you seeing that, Pam, in the deals that you're working on, similar trends?
I think Jerry makes a great point. And I think because interest rates were low, every single company pulled its revolver. I mean, everybody was awash in liquidity. And, we're starting to see those payback now. Even, the PPP loans, as Jerry knows, the people in March really didn't know what was going to happen. So if you could and you qualified, you took that loan, and then some people had a record year because, the third and fourth quarter was a lot better. So, it's a really interesting situation.
I think what influenced it though, which is, I'd love to hear how your portfolios perform, but for example, our portfolio during, for the 2020 actually was more resilient than, it was a great test of the portfolio,
It was
right?
a great
You're
test, yep.
So, and we were thankful that our portfolio held up really well. I mean, no one's immune completely, right? If you have a large portfolio, but by and large, I mean, we had net appreciation every quarter. So we had some up, some down, but in general, that was very resilient. And when I talked to a lot of my colleagues in other funds, that was the same. And I guess the point I'm trying to make is that because the companies fared better than probably one would have expected, that helped support the bounce back of the markets, both from a leverage point of view as well as valuation point of view.
Yeah,
And Suzanne, I think you're back on.
I think you're back.
And Suzanne, can we hear you? Suzanne, are you there?
She
No,
can't
maybe
hear.
us.
She can't hear.
Sorry about the technical problems.
Sorry. Anyway, so yeah, Jerry, I think you're exactly right. We had of a portfolio of about 60 on the buyout side. I would say we had 7 or 8 that struggled a bit, and those were either in sectors that were just badly impacted because, for example, one company helps hotels with their reservation systems. Well, no hotels, no reservations. So really, it was those companies that struggled. Everybody else just did great.
Yeah.
Let's talk about sectors for a minute because, I'm also looking ahead to what kinds of sectors are going to see, a lot of deal flow this year. I think of the things going on with the environment or with infrastructure, with healthcare. What are the exciting sectors for deal making this year?
Well, I mean, I think you just listed, I think anything, and I do think technology remains anything that enables faster, better, cheaper, but particularly true in infrastructure in healthcare. Now, a thing we're going to have to watch on healthcare, everybody, is that the Washington Post on Friday is going to do a really negative article coming out of a study from U of Chicago about how nursing homes owned by private equity firms did worse in COVID than anybody else. We have a lot of information to counteract that, but no one cares because I can already see the tweets coming out, which are going to say private equity killed 20,000 people. So we should just, that's a thing for us to watch. And I think you could see some regulation about private equity investing in the healthcare sector. Jerry, there was a bill in California requiring approval from the Attorney General, and it was really broad. I mean, because we would say, well, our little companies are not going to be affected, but that's not really true. So healthcare is one I'd be a little bit careful of. But anything to do with climate change, anything to do with faster, better, cheaper, I think is personally good.
Yeah, and infrastructure. There's going to be a lot of money going into infrastructure, and that covers a wide swath of types of businesses, but in terms of both services as well as products. But I think you can see what happened with Texas, and what's happened around the country, that our infrastructure is woefully lacking and needs refurbishment and upgrade too. And there's the smart grid is another big area. Electrification. I would say there's a lot going on there. We do a lot in healthcare and business services. So, I was listening very carefully to what you're saying, Pam. But there's a lot of parts of healthcare, both product, medical device, as well as the service that we do both. But, it's unfortunate if you have the bullseye on private equity, which is generally done positive, not negative things.
Right.
Well, let's talk about that a little bit. I wrote an article recently about, saying that I think it's time for the private equity industry to take more leadership on a number of issues, things like protecting essential workers. The private equity industry employs many essential workers. Things like diversity, equity and inclusion, ESG issues. There's a new administration. We're going to be talking about that again, later in the day. But you've got a new administration to educate about the role of private equity. I mean, some of them are familiar to you from the Obama administration. How do you guys see the private equity industry making an impact this year?
Go ahead, Jerry.
No, I was gonna say, Pam, I think that was for you.
Oh, that was for me. All
Yeah.
right, fine. Well,
Yeah.
so first of all, on the whole ESG diversity and inclusion thing, I'm a firm believer of if you can't measure it, you can't manage it, and none of us really have a good measuring mechanism. So I think we're working on that, on different ways to measure. I think I saw some Gobi people on the list. I know that Gobi is working on a project to do that, to help people measure. And obviously there are many firms who will help you with thinking about that. But I think for American firms, not so much for Europeans, because the Europeans have been, very advanced and very thoughtful about this earlier than we. I think we have to start. I mean, it is critical, that we get going. And I think you've sort of seen, Riverside happens to have more women than a lot of firms, but we're not doing particularly well in other minorities.
Yeah.
So, and we've done a great job of looking at ESG when we buy a company, but we haven't done a fantastic job systematically ensuring that we do something good while we own it. We do, anecdotally, but so. So those are things that we really need to worry about. I just did see that KKR is trying to address the wealth gap by ensuring that some of its people, that it gives options broadly to companies that it buys. So I think that's
Suzanne,
something we have to
do
do.
you want to weigh in on, we're talking about the impact of the private equity industry on, the larger world in issues like diversity, equity, and inclusion, the environment.
And so I think it's inherent to probably all of us on this call. We probably think about it because we're used to being in the minority. So if I take the social side, right, which is just more diversity within our organizations. And, I look at even lower middle market companies. It's very rare that I will have a female executive on the other side of the table, or CEO or seller. And so most of the companies all the companies in our portfolio are led by, white men. But they are really, I think the changes that have happened over the past year really opened everybody's eyes. And what I see is really a desire to want to make changes to address things like the wealth gap, to address the gender, issues. And so we have started working on an ESG policy to make it more formal. But like Pam, and I think most private equity funds, I think we already probably start at the diligence phase looking at those parameters, because ESG is actually very good for business, right? I mean, we have to think about regulatory environment going into the future, diversity, making sure that our executives and the labor force represents society and the consumer ultimately. And so we've started looking at metrics at, individually at our companies, and really trying to drive diversity at the C-suites, not just within, Kinsey. Our organization is diverse by, in its DNA, I think, in just startup, but we've really made a lot of progress at the C-suite level and just instilling the concept of the Rooney Rule. Says we ask all of our recruiters, we want to see people of color, we want to see women in the slate. And I'm not necessarily suggesting we won't, we're going to hire based on that, but we certainly push everyone to bring us the best candidates, regardless of gender and race. And what that's done is actually in one of our portfolio companies over the last year and a half, the executive team was all white men. Today it is, we have, it's about half minority and women. So we've added to the team as the team has grown, and just made sure that we had, Spanish speaking executives, because the majority of the labor force for our manufacturing plants was Spanish speaking. So just being really thoughtful and mindful of, how the governance is playing into social, and then obviously just making sure on the environment side that people are safe going to work every day, and instilling all the, with not just PPE, but, we have nurses coming to our plants, twice a week, to make sure people feel comfortable and that things are not spreading, and really reacting quickly to environmental measures if we see problems there.
Yeah,
Jerry?
Yeah. So we're 100% women owned. We're highly diverse. 11 of our 15 team members are women, minorities, or both. So I think part of this whole thing is role models, right? And showing that it can be done. And we're, trying to help other private equity funds that we work with to, show them the way, so to speak, or help advise where appropriate. I think a really good example is what's been going on in public boards, with the 2020 on boards legislation that happened in California. And suddenly, guess what? There's more than 20% of the boards consist of women, or more than 20%, of women on boards. Since then, the new NASDAQ proposed rules, which I know are being challenged, but there's been, tremendous progress on bringing women and now minorities onto boards, public boards. So I see that as a pretty good analogy of what could happen in private equity boards, as well as obviously within the private equity firms. And in fact, we started an initiative to pull together. I'm on a public board. In fact, I'm a chair of a public board, so I'm starting to get to know other women on boards. And so we're putting together kind of a Rolodex, if you will, of women, qualified women candidates for boards to refer to our private equity sponsor partners to put on boards of portfolio companies.
So one thing I'm hearing loud and clear, we're going to need to wrap up in a minute, but one thing I'm hearing loud and clear is that you all think that these issues are relevant to deal making and are important for the private equity industry to address.
Absolutely. I mean, there's been studies done that show that diverse teams, diverse boards perform better. I mean, it's statistically proven that that's the case. So and as Suzanne said, ESG is also good for companies, and that's been proven.
I think Suzanne said another really important thing, which is just be mindful. It's not about this, oh yeah, I had lunch with this guy and I think he's great. Oh, wait a minute. Like, I have a Spanish speaking labor force. I need someone who speaks Spanish. So
yeah. Well, good. Well, I'm glad to hear it. I think it's a challenge for the private equity industry in 2021, and that I hope I know you all will help me. Thank you so much for kicking off our event, Jerry Harmon, Pam Hendrickson, and Suzanne Yoon. Coming up next is going to be a fireside chat with Amy Errett, the CEO of Madison Reed, who this morning announced a new funding round. And among her new investors is Portfolio Rising America Fund. We have the lead investor from that fund, Lorene Pendleton, who's one of our top 25 most influential women in mid-market M&A. And Amy, Lorene, and I are all sitting down in a fireside chat in just a moment. That's at 9 o'clock. And on the left-hand side of your screen, you go to live sessions to find that one there. So thank you very much to all of you.
Thank you.
Thank you.
Throughout the day.